Good morning. Good morning. Good morning. Good morning. Welcome to Marketing and Mindset. I am so excited to get started today, like I am every Wednesday. I'm so happy you guys are here. My co host should be showing up soon, and my guest speaker should be showing up soon. But we are talking financial tips this morning, specifically for tax season. We might get some bookkeeping tips. I cannot talk. But yes, it's going to be a really good room. Welcome, Connie. I am so glad you're here. I was just telling them that we're going to be talking tax season and getting some financial tips from our guest speaker. So I'm super excited to get started. Welcome, Megan. So go ahead, Connie, and introduce yourself and let the room know who you are. Well, you know what? Let me introduce myself. So I haven't even done that. My name is Vanessa Cooper. I'm a Pinterest marketing expert and content creator. I'm here every Wednesdays at 9 a.m. Eastern with my Clubhouse bestie, Connie, and we try to have a guest speaker almost every week to share awesome value with you guys to help your business grow, whether it's marketing or mindset tips. And so today we're going to be talking financial tips related to tax season, maybe some bookkeeping tips, but we're going to learn. I'm excited. So Connie, go ahead and introduce yourself and then introduce Megan for us, or, prompt her to introduce herself. I'm Vanessa and I am done talking.
Awesome, Vanessa. Thank you so much. My name is Connie. I go by Ladoc. I'm a Christian mindset stress coach. And if you've been in a room with me before, you know that I always say that stress is an emotional response to a situation. And because we're emotional beings, we respond with our emotions all the time. So I'm here to help you change your mindset. Make sure that your emotions don't control your behavior because you do have control over your behavior. And I'm here to offer Instagram tips as well. Thank you so much for being with us today. And Megan, go ahead and unmute your mic and introduce yourself.
Good morning, everybody. This is Megan. Thanks so much for having me on here, Vanessa and Connie. I'm really excited to be here this morning. So a little bit about me. I'm the CEO and founder of Sidekick Accounting, and we specialize in empowering owners to understand and use their numbers to grow profitable and successful businesses. And I'm done talking for the moment.
I love it. Thank you so much, Megan. I'm very happy that you're here. It was such good timing too, because I had someone previously scheduled for this room and they had to cancel last week. And so I was scrambling around trying to find a good fit for this week. And once I found out what Megan did for a living, I was like, oh my gosh, like I need her here to talk and give us some financial tips and some tips on tax season, just because it is tax season. And a lot of us, either you just started a small business or your business is growing, or you just have questions and you have no clue where to even start or how to keep yourself organized. I know I could probably do better keeping myself organized. I feel like every year when I do my taxes, I'm like scrambling, like getting stuff together, and I don't have a bookkeeper. My tax ladies always offered to do bookkeeping for me, but I just haven't gotten there yet. I'm still kind of like a control freak with all of my stuff, but I'm also disorganized, so every year it's like chaos when it comes to tax season. So I figured this is a great time of year to have someone that can give us some tips. So Megan, before we get into giving us tips, can you just tell us maybe of what got you into what you do, and then maybe just give us one basic tip, that a general tip that you recommend for people who have small businesses to just kind of help them get prepared for tax season. I'm done talking.
Yeah, absolutely. So I always tell people that I fell into being a business owner. Never thought I would do that. And my story is kind of long, I guess, but to sum it up, I was a teen mom. So I got pregnant when I was 16 and had to figure out what I was going to do. And so accounting was something I kind of had a knack for in high school. And one of my teachers told me I should make it a career. And so I did. And then a few years later, I was working in accounting, and then got laid off of my job as a bookkeeper at a landscaping company, and then another part-time job in accounts payable, and had to kind of figure out what was next. And so that was kind of what started my journey of entrepreneurship. And 9 years later, I've been in business for 9 years, and I'm now a single mom to 4 kids, and we service clients across the US, and I have seven other team members on my in my firm, and we serve hundreds of clients every year, and I just couldn't imagine like not doing this. And it's really become a really big passion of mine to help other people kind of do the same thing that I was able to do, because my business helps support me through a lot of life transitions, really hard situations, having two babies back to back, along with some other stuff. And I just couldn't be where I am without having my business. And that's been a huge piece. And I want to be able to do that with other people and help them make their businesses successful and their dreams successful, to reach their goals. So, one big tip that comes up a lot of times during tax season is kind of what you were talking about, Vanessa, of just like scrambling to get things in order. People get really stressed and overwhelmed. So, one tip right off the bat is like numbers for a lot of people, and doing their books is something that nobody really likes to do. So, the one big tip that I always have for business owners is to put it in your schedule. Like, if you can get your bookkeeping and your numbers into your schedule at least quarterly, but if you can once a month, especially, that's the best way. Your numbers are so important, not just for tax time, but just the overall health and operations of your business. And the more frequent you can do it, the easier and the less stressful it is. So right off the bat, that would definitely be one of the first tips I would offer.
Thank you so much. That's a really good tip. And oh my gosh, like your summarized story of how you even got started with what you're doing was so amazing, by the way. Like the fact that you said you were good at accounting in high school, like I was good at skipping class and like partying in high school. So I'm just super impressed that you were doing something so good already. And like we're good at math and stuff to get into accounting. The fact that you're a single mom with 4 kids, I commend you for that. I'm not a single mom. I was a single mom at one point with 1 kid. Now I'm remarried. But like just me when I was a single mom with 1 kid was overwhelming. So the fact that you have 4 and you're just doing it and living large, like that's super impressive. So I just got to give you kudos for that. It sounds like you've got a great business going on. You got a lot of team members. That's awesome. Your tip on getting organized is so good. And I have some questions on that. You said you could get to kind of stay organized and prepare yourself for tax season throughout the year. Doing like your numbers quarterly or once a month is a great way to kind of stay on top of it. So, every year, obviously, I'm overwhelmed because I literally don't do anything until the end of the year. And then I'm sitting there scrambling through all of the invoices of my virtual assistants that I've paid them, all of the invoices that I've sent and that I've been paid for my clients. And then I'm doing the math, like what I've profited, what I've paid for, trying to figure out what my gross income is and all that. So, what exactly are like the main things for somebody who's like brand new at doing any kind of bookkeeping for themselves? Like they have no idea where to even start, what numbers to look for. What are some of the main things that people need to kind of jot down? Let's say we were doing this monthly. Let's say that we're going to jot down every month, like, this is this number, this is this number, this is the number. What are like the main things that they need to look for and keep organized monthly? I'm done talking.
Yeah, that's a great question. So really what it comes down to is understanding what qualifies as an expense. That's always a big thing. So I recommend people to have like a spreadsheet or some kind of an accounting software, because it makes it a lot easier. Our preference at our firm is QuickBooks Online. However, Wave Apps is a free accounting software that if you are just starting out, it's a great, like real basic software to use. But when it comes to like what to mark down and what you have to pay attention to, basically, the way that the IRS defines a business expense is something that's ordinary and necessary to the operations of your business. So that's a really like big, big umbrella of what it can fall under. So some things to think about when you're thinking about, okay, does this fall under those guidelines? Is if you need to do it in order to operate or sustain or function your small business, and that can include things like professional development. So like if you are going through a class or you're working with a coach, those are things that you can deduct under your business. And the purview that you have to kind of keep it within is just to make sure that it's not extraordinary. So for one example I like to use is, if I was going to a business conference, I can write off the travel. Now, if you're making it like both a business and personal trip, or you're traveling with other people that have nothing to do with your business, you can only write off your portion. But when I'm thinking about, okay, staying at a hotel, for instance, and there's a Hilton or a Holiday Inn available and in the surrounding area, but there's also a Ritz Carlton. Staying at the Ritz Carlton is probably not an expense I could justify because I can stay at a perfectly good, cheaper hotel instead. So that would be an example of something that's extraordinary or ordinary. You want to make sure that it's more ordinary. However, the other part of it is you can get a little bit creative as long as you have the justification for it. So one of my most favorite stories to talk about when it comes to this topic is there was an actual case that came before the IRS for this realtor that wrote off her yacht. Now, the IRS was like, whoa, 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 whoa. That's a yacht. You can't write off something like that. That's for, personal pleasure use. But she went before the IRS court and she argued that she was a realtor that sold really high end properties to her buyers, her customers. And they didn't want to see the houses from the front door. They wanted to see the houses from the beachfront. So she would take her clients out on this yacht and show them the properties from the beach. And she won that argument because for her business and her clientele, having a yacht was something that was ordinary and necessary for her business. And that's really the lens that you have to look through when it comes to your expenses in your business. You got to make it reasonable, a reasonable argument. And I would always like bounce that off of like your accountant or a mentor or something like that. If it's something that's like unusual or something that's kind of like that. But that would be the lens that you want to look through when you're talking about what's ordinary and necessary for your business. And pretty much anything that falls under that is something that you should keep and put together. And then the only other tip along with that is make sure you have a separate bank account for your business. Keeping your business and personal finances separate is super, super important when it comes to your bookkeeping as well as your taxes. I am done talking.
That was awesome. That was a lot of good advice. Thank you so much for sharing that. Yeah, I love that example too that you gave. It is very creative. And, I think like I have done since I started my business, I've done my taxes with a couple different people. Originally, I used my the tax lady I'd been using for like a little while. Then when I got married, my husband wanted me to use his tax people and I used them. And man, I was so nervous because given my business was really pretty new, it was like the first year, like the first full year of my business, they did not ask me any questions. They did not give me any kind of form to kind of check off and make sure I was writing off everything that I need to. They did not educate me on what I should write off. They just like got my information and just like did it, and I just gave them like what I thought I should give them because they had no guidance for me at all. It was really nerve-wracking. And then they ended up filing our taxes, believe it or not, under our old address. They didn't even confirm, like look at the paperwork and realize that we had a new address or confirm that they had the right address. They filed it under the wrong address. We didn't get our tax return till like the end of July, like, and we had filed in January. And like it was such a disaster. And so that really made me realize how important it is to make sure that you have someone doing your taxes that educates you and that teaches you things like you just taught us, something that, that you can write off that you might not think about that, like you said, is necessary to grow your business. So I switched over to a different lady who specializes in online businesses and have learned so much since. It's just so important to make sure that you're doing it correctly. So I appreciate what you do. That was excellent advice. And what you said about having a separate bank account, it's funny. I just started doing that. Sorry if it cut me off. It said I had poor signal for a second. You guys are hearing me, right?
Yeah, you're
Just
good. You're good.
okay. Okay, I just want to make sure. But yeah, so what you said about having a separate bank account was also such good advice. I just started doing that. Believe it or not, my husband, we've been married for a few years, but we did not have our bank accounts together until recently. We finally got a joint bank account, decided we're going to do all the financing together, but I kept my old bank account, and he even advised that he's like, keep your old bank account, do your business transactions through there. So that's what I use it for. And it's been great. I'm like, I like this. it's going to be easier to kind of look back, get back to it, and keep my stuff organized. And that's where I pay my VAs from, and that's where I deposit like some payments. Some of my clients send me checks in the mail. I actually get checks in the mail from one of my clients. And so that's such excellent advice. Connie, did you have anything to add to the conversation? I'm done talking.
Yeah, I wanted to ask a question. Sometimes when we talk about the financials of business or like incorporating your business or whatnot, a lot of people are confused. Can you talk a little bit about the difference between you filing your taxes and putting all your bookkeeping together with your personal versus with the company? I think that one of the things that surprises a lot of people is when they incorporate, you have to file taxes quarterly depending on which one and how much money you're making and all of that. And I think that becomes a little overwhelming. So you mentioned, bookkeeping at least minimum once a month is like your best practice. But can you describe the difference between one or the other, and what are some really important deadlines that people need to stick to, or at least know, put it on your calendar, like you have to have everything ready by a certain date?
Yeah, that's a great question. So, when it comes to the quarterly estimated tax payments, there's a lot of misconception around it. Those are actually required regardless of whether you have a business or not. If you owe, you're supposed to make quarterly estimated tax payments. And basically, what it is, it's like a prepayment to your tax liability. The thing is that most people that are working a job, they have enough withheld from their check that they don't have to make quarterly estimated tax payments. And then, of course, the alternative is if you are a business owner, chances are you're not having any kind of taxes withheld because you're self employed. So that's where making those quarterly estimated tax payments comes into play. It's recommended, not we're required, loosely, I would say loosely required. There's a penalty that you can pay. It's usually pretty nominal if you do end up owing taxes, but you need to pay those, or the times of the year when you're supposed to pay those is April 15th, and then July, and then October, and then January 15th is how that quarterly estimated tax payment schedule goes. um and then, if you do owe a tax liability, another thing that people miss is that you have to pay those taxes even if you don't file your taxes by April 15th. Otherwise, you get penalized or have late interest. So even if you file an extension, if you don't pay the taxes on that tax liability by April, you're still incurring interest and penalties for not paying it before that period of time. So hopefully that wasn't too confusing with that conversation about estimated taxes. And if you have any questions, please feel free to reach out for more clarification if we don't get to it on here. The other question that you had was regarding to entity structure. So the IRS actually does not recognize LLCs. They are either classified as a sole proprietorship, or they are designated to be taxed as what's called an S corp or a C corp or a partnership. So when you have a single member LLC, it has to fall under one of those buckets. Either it's a sole proprietorship, which gets filed with your personal taxes, or you can elect to be taxed as an S corp or a C corp, and those have their own tax returns along with a partnership. A partnership also has its own tax return. But either way, there's always something that comes back to be filed with your personal taxes when it comes to having a business. So if you do have a business, you need to have your business information completed, your tax return for that completed before you can file your personal taxes. If you are a single member LLC or a sole proprietorship, then those taxes actually get filed along with your personal taxes. And there is some confusion about that, but hopefully that kind of clarified things a little bit.
Yeah, that's really helpful. As a follow-up question to that, I know in the beginning when I helped some of my clients doing mindset, they would ask me like, I have a problem with finances. Like I feel like I'm not making enough money, I'm not charging enough and all of that. I'm just going to obviously I wasn't giving them financial advice, but a lot of the times they would say, I'm just self-employed at this point. I really don't have a business, and trying to work them through that mindset. But I see that also dangerous, you are self-employed, but that is a business. So tell me, what advice you would give somebody who would say to you, well, I don't have to do all that, and I don't have to, I don't have to get an LLC or an S corp or a C corp. I'm self-employed. I'm just going to put that piece into my taxes. What's the pros and cons of somebody starting off doing that versus going out already and doing it the other way?
Yeah, so I think I understand your question, but what I hear a lot of times also, and you can correct me if I'm wrong, Connie, on this, but what I often hear is like people will have like something going on, maybe like a side gig, or they're just starting on. They're like, I didn't have a lot of income, I didn't have a lot of expenses, so why do I even have to include this in my taxes? Is that kind of the angle you're asking about, Connie? Just before I keep going.
Yes, some of them would say, you know what, I'm just going to put it on the self-employed piece of my taxes and that's it. I know that there's a good piece and a bad piece to that, and I kind of want people to get out of that mindset, because I'm more about, if you're working on something for yourself, it is a business. It's not a side gig. Like, if you think about it as a side gig, it'll always be a side gig. But yeah, some clients would say, well, I'm really at the beginning. I only made $1,000 this year. What's the big deal? I'll just put it in as self-employed. And I always wonder, since I'm not a tax expert, like, is that the right thing to do? Like, what's, that's kind of where I'm coming from.
Okay, gotcha. Thank you for clarifying that. Yeah, so if you are a single member LLC or a sole proprietorship, you do file under, I guess you could call it the self-employed. It's called the Schedule C, is on the tax return, is where that gets put onto your taxes, and that is legitimate. If you have a single member LLC or side gig, or if you don't have an EIN, that's where that information would go on your taxes. And I think that's a great like first start. Honestly, a single member LLC is the best way for people to start their businesses, because you have the option to later down the road elect to be taxed as either an S corp or C corp. So having an LLC really allows you to have more flexibility when it comes to the taxation of your business. In terms of like how your mindset is on that, I mean, I agree with you, Connie. Like, you really have to um think about your business as being something that you want to be successful, because if you stop it or you disregard it, or like what I hear a lot of people say is like, oh, I didn't have a lot of activity, so I don't need to file my taxes on the business, that's incorrect. Because one, for a couple of reasons. One, you're supposed to report all income and expenses regardless of where it's coming or how much it accumulated to. Two, if you do plan on growing your business, what filing your business, even if you have a loss, does is that it sets you up to have history for your organization or your company, which is going to be potentially something you'll need later down the line if you ever try to get funding. So if you want to get a loan at some point, they're going to want to see this history of your business going from the beginning to, incrementally increasing year after year. And then third, a lot of times, even if you have a loss, it can offset your other income. So it can actually be a really great tax benefit if you include that information, because it will lower any other tax or income that you might be taxed on, and then overall your tax liability. So there's many different reasons, including that mindset piece, for including your taxes. You just have to make sure that you're treating it like that. If you want it to grow and you want it to be something, then treat it like that, like you were saying, Connie.
Thank you so much. That was awesome. That's what I was thinking of when you were talking. So that's the question I had for now. Go ahead and take it away, Vanessa.
Those are excellent questions, Connie. Thank you so much, and excellent answers, Megan. So happy that you're here today to let us pick your brain on all of this stuff. Um, I wanted to ask about doing quarterly bookkeeping versus annual bookkeeping. I have two different questions actually. So first, is there a benefit at all with either of them? I mean, you essentially have to pay the same amount regardless, right? And also with my business, some people, I have some clients that come in, and this happens every year. Like, I have my basic clients that I've had for years, and then I've got some clients that just try, like, Pinterest marketing. They want to try it out for 3 to 6 months, just kind of see if it's a good fit for their business. Unfortunately, with Pinterest marketing, you have to have patience. So some people do not have the patience. They hit 6 months, and if they're not, if they're not getting as much traffic, oh, I'm so sorry. I dropped my phone. I dropped you guys. If they're not getting as much traffic as they wanted for 6 months or whatever, even though I give them like zero expectations, um, they'll stop, and they'll end their services with me, which I'm okay with. It happens every year. So at some points of the year, I might be making way more than other parts of the year. I think like with any business, it goes up and down. Does that make a difference then when it comes to taxes, whether you do them quarterly or monthly? I feel like mathematically speaking, it's the same, but I'm not 100% sure. So that's my first question. Then I'll ask you the next one after you answer that one. I'm done talking.
Yeah, that's a great question. And you're right. A lot of businesses do experience that influx and reflux of like business income throughout the year. So what we really recommend our clients to do is to save at least 25% of their net income, 25 to 30% of their net income regardless. And so that's one reason why doing your books more frequently can give you a better idea of what that number actually needs to be. And so even if you don't pay it into the IRS, you can be putting it away into a separate savings account, which makes it a lot easier during tax time because then you're not scrambling to have to pay any money if you do end up owing taxes. So it kind of acts as like that nest egg. And the only way to be able to figure out what 25 to 30% of your net income is by doing your books, because your net income is your income minus all of your expenses for that period of time. So that's what we usually recommend. And one of the reasons why it's really good to do it that way. Two, from an operation standpoint, the reason why your numbers are important to stay up on more frequently is because you can find out a lot of information from that, especially as you continue to grow. It's a lot harder to keep track of your numbers in your head, which is what most small business owners do when they're not actually doing their books. They're trying to keep track of, how much money is coming in and going out based off of either their bank balance or, trying to keep all of that information in your head. But when you start to put the numbers down on paper, you can actually start to see where that money is actually going and then start to make better operation decisions off of it, because you can figure out things like, why is an expense higher than you had planned for, or how much do you need to get, what point do you need to get to in order to be able to hire a person or hire a contractor or do that program or whatever it might be. There's a million and 10 different types of scenarios, but having that number and numbers and data put together just gives you more power to be able to make those operational decisions as well as plan more effectively for tax time.
Awesome. And when it comes to filing taxes, um, is it better to, that's what I was asking specifically, filing like paying your taxes that you might owe. Is it better to do that quarterly versus annually? Or does it make a difference? Like does it matter, which one you do at all? Sorry, I'm done talking.
Yeah. So there's so just kind of going back to what I had mentioned before, is that if you don't pay in quarterly taxes and you owe taxes, there is a small penalty that you do have to pay for basically like underpaying your taxes, your tax liability. So quarterly generally um might be the better option, but we have clients that do both because the penalties on it are pretty nominal. So like the clients that don't will put it into a savings account, because then you have like this conversation of cash flow or like paying the IRS, or having them hold your money before. There's a million reasons why technically you're supposed to, if you owe taxes, you're supposed to pay quarterly the year after you owe taxes. But it really comes down to preference. It's just, I think the important part is just having an understanding of what that means for you, and then having that savings account for that tax liability at least put aside if you're not going to pay them in quarterly. So saving throughout the year is definitely my recommendation, whether that's paying in quarterly or just putting it into a savings account.
Okay, excellent. And then I have one more question for you. And then we're gonna move on with just me asking a bunch of questions. And guys, anyone in the audience who has a question, you guys feel free to raise your hand and you can come up here and ask her directly. Or if you're not comfortable coming up and chatting, you can put it in the chat box. Just type in your question. It's on the bottom left of your screen, and you should be able to type in your question and we'll get it answered for you. But I did want to ask, I was recommended, and I want to get your kind of second opinion on it, to not do an LLC until until you're making over $50,000 annually in your business. I'm not exactly, I can't remember why, but is there a certain income that you think it's not worth getting an LLC when it comes to tax season? Um, I can't remember what it was, and maybe you might understand why it was suggested, but is there a minimum income that you should be making in your business in order to do your LLC? I'm done talking.
Yeah, so that sounds like it's actually probably a recommendation for an S corp. At least that's what we recommend. An LLC, there's no income limit as to when you get an LLC, and really the reason why people decide to open or organize as an LLC is because of the liability. When you have an LLC in place, along with having like liability insurance, what it does is it helps protect your personal assets, because then your business is separate from you personally. So if you have a business that may be something that you could be at risk for getting sued for, you should be forming an LLC for that. Some examples would be like food based businesses, anything related to like products a lot of times. But even like service based business, where like for us, like that was something I did pretty soon after I started my firm, was to create an LLC for it, because people can get upset or whatever. People sue for everything, right? So, in my opinion, an LLC is great to start off with either way. There's no income limitations. However, to that $50,000 point, you can choose to have your LLC be taxed as an S Corp. And what that does is it does provide some tax benefits for like the liability purposes, but what it requires is for you to be on payroll. So you would be paying yourself as a W-2 employee when you're an S corp, and you have to also make sure that you have, tracking your basis, and then make sure that you are um, paying yourself reasonable compensation. So there's some additional factors to that, that sometimes get a little bit more complicated, which is why we recommend people, like, once you get to that $50,000 mark, that's when we would have a conversation to decide if we should have you elect to be taxed as an S corp. But you can form an LLC whenever you want. There's no limitations, and it's still treated the same way as you would a sole proprietorship. So your taxes still get filed along with your personal return under that Schedule C.
Thank you so much. I really appreciate it. You explaining that. My tax lady, that's exactly what she was talking to me about. I think is the S score. Now that you explained what that was, that's exactly what she was talking about. Waiting a little bit before doing that. But I think she talks in a lot more. She uses a lot of like tax jargon that I don't know, and I'm like, I don't understand half of what she just told me. So you were able to explain it in a more practical way. So I really appreciate that. I wanted to ask, what is another good financial tip that you recommend for people, whether it's for preparing for tax season or something that, when it comes to your business finances, that people might, something that you come across that people don't keep in mind, that maybe, you need to say like, hey, you guys really need to think about this. Just any other good, great financial tip that you can share with us when it comes to small businesses or tax keeping or tax season or bookkeeping. I'm done talking.
Yeah, that's a great question as well, Vanessa. You've had some great questions, both of you. So I those are like a lot of the ones that I've already talked about are a lot of the basic ones. But I think the one thing that I would probably share additionally to that is that, a lot of times people talk about like, oh, I'm not good at numbers, and I don't have a business background, but they want to grow their business. And the thing is that if you want to grow a business successfully, if you want to grow it to where you have a team, or you expand, or you eventually want to sell or pass down your business, your numbers need to be a priority. Like the numbers are not contingent on you being good at math. It's really contingent on you being a business owner. Like, it's something as an owner you have to have an understanding about. If you think about every big organization, they prioritize their numbers, and there's a reason for that. You have to be a data driven decision maker when it comes to being a business owner. So having some kind of a structure put in place for that, from the beginning of when you're starting is usually the best way to go about doing it, because with anything, any part of business, as you grow, the biggest, the most important thing to have in place is a system. And the same is true with your finances. So even if you're not good at it, even if you're not the one doing it, having some kind of a system or thought process in place when it comes to your financials is really, really important to having a good, successful, and sustainable business. And so hopefully that's helpful on that. But that is definitely the next recommendation I would have, other than the ones that we've already talked about today.
Awesome. No, that's really good. And Connie, feel free to chime in if you have any other questions. I did want to ask, and kind of going back to the LLC, just because it's something that, I've had in mind, but just haven't done. And so I was curious, with me, I do Pinterest marketing, and, I've thought about the LLC mostly because I'm in and out of a lot of people's like accounts. I'm in their Google accounts, like their Google Analytics. I'm in their, social media accounts. I'm in their Pinterest account. And I always wondered, like, if anything were to ever happen where they felt like, their account got hacked, or, something like that happened, or they got robbed. And I was one of the only people that got access to their accounts. You know what I mean? I get nervous, like, okay, maybe I do need to protect my business a little more and make sure that I'm good. But is there any businesses where you would not suggest doing an LLC, where you're like, you are good? Like, I would not, invest in doing that. I would just kind of leave your business as is. Are there any where you don't suggest it, where you're like, nope, don't do it? Do you ever run into that at all? I'm done talking.
Yeah, that's a great question. I think generally speaking, there's not like, you can really make and create an LLC for any kind of business that you have. I guess what I would probably say though is just some considerations. One is, understanding the difference between what a business and a hobby is, because that's one thing that the IRS does look at. So the general rule of thumb is that if you have some kind of a quote unquote business that you're operating, but you aren't actively like trying to grow it or make more money, or you have loss after loss after loss for like 3 to 5 years, the IRS could designate that as a hobby. And what that does is basically it just allows you from claiming the losses. So that can be something that becomes a problem later down the line. So if you have something like that where you're not really vested in it, where you're not really wanting to grow, I would maybe wait to say, or to structure an LLC from that. Um, but if you are actively, bringing in an income and wanting to grow, then you can definitely do an LLC. The other one that I sometimes, depending on the situation, don't recommend is when it comes to like a rental, some kind of rental business, housing, rental housing business. So when you have, or rental property, excuse me. So rental properties are treated differently, generally speaking, on your taxes than a business would be. And so I think depending on whether you want to make your rental property situation into a long-term business or not will determine whether or not you should just keep it under your personal or make it into an LLC. And that's, kind of dependent on, situation by situation. But that would definitely be one of the other areas that I would, maybe caution or maybe take an extra look at before recommending an LLC formation.
Awesome. Awesome. Thank you so much for answering that. And then another question I wanted to ask is, let's say you have a business that has multiple streams of income. So my main business is a service-based business, but I also have an Etsy store where I'm starting to sell some digital products on there. Does it matter at all to the IRS where the income's coming from? Do you need to separate like your paperwork, like have it like fully separated as to this part of my business made this much and I spent this much in this part of my business? Do they care, or can you just sum it all up into one spreadsheet, if I may? I'm done talking.
Yeah, that's a great question too. So it really depends on like the umbrella, I guess, that you have it under. So typically, if you have businesses or business or different streams of revenue, like you said, that are completely different from each other in terms of like industry, then that may be an opportunity to separate it. So, like, for instance, we have worked with some people that have like a product based business, but then over here they're also doing um like a restaurant. So they're making like maybe lip balms and stuff, and then have a restaurant over here. Those are two completely different types of industries, so that it would make sense to have them under two separate umbrellas and separate LLCs. However, like if you're selling like digital products, but they still kind of fit under coaching or consulting or marketing, that you could probably leave under the same umbrella. So that's usually what it comes down to, is like how different are they in terms of industries. But the biggest thing is just making sure that it's all getting reported.
Okay, awesome. That's a great answer. Yeah, I wasn't 100% sure. And my Etsy shop, I literally just started. So I told my tax lady, I was like, all right, I got new stuff, to report to you this year. But I wasn't 100% sure. I sell some products related to my service-based business in there, but then I'm also going to be selling products that are completely unrelated. However, they're digital products, like mostly digital products. If not, they're going to be like drop ship products. I'm not exactly sure if I would even want to do an LLC for that, because I don't know, like I don't see the risks in that, especially since the prices aren't even that high for most of the stuff. But that's something I'll definitely talk to her about in more detail, so I don't take up all your time. I'm gonna go ahead and pin your link, if I can find it. Here it is. And then I want you kind of to share with everyone, just kind of remind them who you are, what you do, where they can find you if they want to reach out to you. If they realize, I need a tax lady for my business that knows what she's doing, you definitely know what you're doing. And if they want to reach out to you, where they can find you. I'm gonna pin your link up here, let them know what this is and what they can find there, and how they can connect with you. Hold on one second. I was gonna unmute myself so I could let you take the reins, but I'm in the process of putting your link in here. Let me see if it goes up there. So yeah, so go ahead and let them know where they can find you, what the link is, and a little bit about yourself again and how you can help them. And I'm done talking.
Yeah, thank you so much. So yeah, my business, my firm, we work across the U.S. We're a virtual firm. We provide bookkeeping, tax prep, and tax planning services, and we really put an emphasis on helping or empowering owners to understand and then use those numbers to grow profitable and successful companies. And we do it by making sure things are accurate, along with some education and then proactivity infused into all of our services. And I am on LinkedIn, Instagram, and Facebook, both personally and then through my business. And yes, I love helping owners understand things better. So if you do have questions, or you would like to talk more, definitely feel free to reach out.
Thank you so much. That was excellent. I really am so glad you were able to come here today and let us kind of pick your brain and get some of these amazing tips from you. Connie, did you have anything to add or any last minute questions at all before I start shutting down the room today?
No, just thank you so much for offering so much value to our guests today. For those of you that have been here with us for a while, or this is your first time, just make sure you follow us on here on Clubhouse and continue the conversation on one of our social media platforms. The best way for you to be better at what you do is to be more better informed, and so that's what we're here to do today. Thank you, Megan, for hanging out with us today.
Thank you for having me.
Yes, thank you so much. And just a reminder to everyone in the room that this was the Marketing and Mindset podcast here on Clubhouse. We're here almost every Wednesday. We do take a Wednesday off, almost every Wednesday at 9 a.m. Some days we're going to be talking Pinterest marketing. It'll be me. Some days it'll be Connie sharing mindset tips or Instagram marketing tips. And then some Wednesdays we're going to have a guest speaker sharing new topics, new advice. I am constantly looking for new guest speakers. So if you're interested in coming up here and talking, if you have a topic on marketing or mindset that you're an expert on and you want to share, you can go to networknessie.com. You can find more info on it in my bio here on Clubhouse and on Instagram. And check out the podcast tab on my website, and you will find the form in there to apply to be a speaker. But otherwise, we'd love to see you here on Wednesdays at 9 a.m. to get some value from us to help grow your business through marketing or mindset. And if you guys have any questions for either of us, feel free to reach out to us. And I hope you guys have a wonderful rest of your Wednesday. I'm going to go ahead and shut down the room here in 5 seconds. 5, 4, 3, 2, 1. Thank you guys so much. Have a wonderful rest of your week. Bye.